Super.
All right, we got a lot of people here.
Yeah, our friends are coming in. That's good.
I'm kind of nervous, Matt. This is a big audience.
Yeah. Well, fortunately, we don't see them all, and they don't know
That's true. Yeah.
they don't know we're wearing gym shorts because we're on Zoom. So,
Yeah. Well, thanks for letting them know. All right. Thank you, everyone, for dialing into the Chang Robotics Fund webinar. We can give people another minute.
Robert, I see you're in our boardroom east. That's good.
I am. Yeah. We got the nice office setup for this. 41 people so far. This is awesome. Matt, I'm going to give it another 30 seconds. I've got people still rolling in on my side.
Perfect.
All right. Looks like we've got everybody in the room. Thank you all for joining the Chang Robotics Fund webinar. I'm Robert Sterling. I'm the CFO of the Chang Robotics Fund. We've got my friend Matt Chang, the general partner and leader of not just Chang Robotics Fund, but Chang Robotics. We are really excited and honored to have everybody here. Thank you all for your time. Matt, appreciate your time as well. This is going to be a great conversation. We've got a lot of friends of yours here, friends of mine here. For anybody new, for anybody who doesn't know you, if you could give a little bit of your background, that'd be great. I'm assuming since you're starting a venture capital fund, you're probably located in Silicon Valley or the San Francisco Bay Area. I'm assuming your background here is finance, Wall Street. You probably worked in investment banking. So if you could just walk us through kind of your life story and what it is you're doing with Chang Robotics and the Chang Robotics Fund, that'd be a great way to kick this off.
Super. Thanks, Robert. Yeah, so you almost got there. I do a lot of math, just like a investment banker from Silicon Valley, but I'm actually a professional engineer, and I'm located in Jacksonville Beach, Florida. So pretty much the other side of the country, the opposite coast. Um,
I'm 0 for 2 so far, so I might have to cut you off actually.
yeah, yeah. Well, let me do the life story because I think you didn't miss on that part. So yeah, my career was I was supposed to be in the Navy. I went to Georgia Tech on a naval scholarship. And then I was the last wave of the sequester where they shrank the military. So I was supposed to be a Georgia Tech engineer in the Navy. And then while I was enrolled at Georgia Tech, they shrank the size of the inbound officer corps and my number got drawn. So then I had to reset and figure out how I'm going to practice engineering in the real world. And so I did that. I entered a career in design build. I've been writing a lot about how to design factories and things like that. And that was an amazing experience. I traveled the world, ended up living in China and becoming a licensed professional engineer in China, opened up foreign engineering offices in Singapore and Malaysia, and worked in probably 10 different companies doing professional engineering. So that was my career track. And after gaining a lot of experience in engineering, all the licenses and things that engineers go for, I launched a company called Chang Robotics. And that is a company that's all about designing robotic systems that companies and workplaces can actually use. So we've been hard at work with that for 8 years. And it's been a wild ride. We got in just at the right time in the market and have been able to develop multiple first of a kind systems. So I think we're now at 4 or 5 different robotic systems where we say it's the largest in the world or the most advanced in the world. And it's because of when we hit the market and then kind of a can-do entrepreneurial attitude through the lens of engineering.
That's amazing. Really appreciate the background though there. So for Chang Robotics, for the projects you're doing, what is the typical client you work with? Are these large companies? Are they startups? Are they manufacturing companies? Are they energy companies? What type of clients are you working with when you're doing these robotics and automation projects?
Yeah, our typical client profile, I'd say it's most saturated with the Fortune 500 manufacturing companies. So companies that make stuff at high rates of speed and have products that you're used to consuming in your house or experiencing in your daily lives. We also serve governments. So we've been very
Mm.
blessed to serve the city of Jacksonville and the U.S. Department of Transportation, bringing on their autonomous mass transit system here in Florida. And then we work with startups because startups often have really big technical challenges. Not everyone can afford the engineering team of Elon Musk or Jeff Bezos. So we come in and fill that gap for them. And then most recently, over the past several years, we've entered the healthcare market, and we've now been
Oh,
successful
wow.
automating hospitals.
That's awesome. That's a really unique and great group of clients to get to work with. So I'm kind of putting the pieces together here. You're doing work with large companies, with startups. You're doing really cutting edge automation projects. I'm assuming you're seeing a lot of trends in the market and kind of these leading indicators. Does that tie into why you decided to launch a venture capital fund?
Yes, absolutely. So, in our company, we've always loved to write checks and partner with founders. So, currently, I think we just closed our 11th investment into a startup company, and those would just be considered friends of mine. We meet people doing cool
Mhm.
stuff. We start helping them. We eventually come alongside them with both funding and then also technical expertise. So we were already doing that for quite a while, and we've had a lot of success. I was kind of blown away in the venture capital space when I learned what the failure rate was, because so far in our soon to be 11th company, we've had zero write downs in company history. And I just
Oh,
couldn't
wow.
figure out, the VC people are so smart. The VC industry has so much intellectual capital. I'm like, how are they picking companies that don't work? I don't get it. But it's an extreme bias we have at our company, right? We work with emerging technology for a living, and we install emerging technology in high profile workplaces with performance guarantees. So our natural ability to underwrite technology, I think, is probably very high. And we just kind of have a sense of what's going to work. We know what the plant floor operator thinks. We know what the CEO of a Fortune 500 thinks. And then we know how the technology can address needs that are
Mhm.
different for everybody.
That's amazing. Could you walk us through what are some examples of these projects that you're doing? I hear robotics and automation, and I kind of think about like the Tesla robots and really science fiction stuff. But for those of us who are not engineers, who do not work in the field of automation, what does that actually mean for some of these startups and some of these larger companies you're supporting?
Yeah, our bread and butter is autonomous robotic systems. That most of the inbound calls we get from companies looking to hire us are from featuring autonomous robots as kind of the first thing they thought about, self-driving robots, AI-powered robots. We've been doing AI-infused robotics since 2018. And the challenge is the marketplace wants to produce a robot. Kind of think of it as a widget or
Mhm.
I've got a Roomba sitting here next to me that hasn't operated in several months. It's like that. It's a piece of technology that if you have a lot of care, you could operate that one piece of technology.
Mhm.
That's not what organizations are looking for. Organizations want end-to-end solutions that have oftentimes 10 or 12 different robotic types in one project. They want engineering so that those systems can be underwritten by insurance companies, fire marshals,
Mhm.
building departments, and safety professionals. And then the other thing that they want is they need ultimate track and trace from the software side. So if we're going to
Mhm.
turn over formerly manual tasks to robots, we really need to have a sense of what's going on so we can be accountable for our product. So as an example, a lot of my clients deliver in the Costco and Walmart supply chain. Well, if you ever have a quality defect or a recall, you need to be able to answer exactly what happened, or else you're recalling an awful lot of product. So our systems provide that transparency to management teams. They can go back and do an inventory of the database and then know exactly what happened, where it happened, and find that root cause analysis. So that's kind of the difference between us and a robot maker. We're taking a bunch of different types of robots,
Mhm.
we're teaching them to play together with well choreographed software and localized AI so that we're not burdened by having to code every instance. Our machines are capable of making decisions for themselves.
That's amazing. For the clients you're working with for these companies, is the value proposition here just labor efficiency? Is it energy efficiency? Is it greater uptime? Is it all of the above? What really kind of inspires these companies to reach out to you and say, hey, we've got this factory, we need to do more automation?
Yeah, it's different by market sector. So if we take
Mhm.
public transportation as a market sector, Their big concern is around lowering cost per mile and then not obsoleting themselves. They're having a harder and harder time recruiting bus drivers, as an example. And so they need a long-term sustainable solution that's going to help them lower the cost per mile, provide more service, and do it at a more effective cost because it's not like their budgets are growing. So that would be public transportation. In manufacturing, it's a quality efficiency play. We need production with higher quality, and we need it faster. And then in places like healthcare, they really measure the human side of things, and it's all about patient outcomes. Is what you're doing
Mhm.
to a better experience and a better medical outcome for patients? So we take those KPIs of each industry. We spend a lot of time studying that so we can quantify things correctly, and then we design and engineer a robotic system around those KPIs.
That's fascinating. I'm going to pause real quick and let the audience know we do have a chat down at the bottom. Any questions you'd like to answer, you'd like Matt to answer, please feel free, drop them in the chat. We definitely want this to be engaging and interactive for everybody here. But Matt, this is great so far. So when you're working with these clients, and I know you mentioned you've got large clients, you've got small startup clients. Are there trends in the world right now? Are things changing that are leading to more of a drive to automate facilities like this? What are the trends kind of influencing that within the industries you serve?
Yeah, I'll kind of start those trends from the onset of COVID and lockdowns until now. That's kind of the modern
I was kind
paradigm.
of hoping to forget about COVID and put that in the past. But
Yeah,
yeah, let's start there because I know a lot changed with that situation.
yeah, that was a big shock. So you guys might remember the supply chain bullwhip, right? And if you're not part of the actual supply chain of America, which is now we know amazingly complicated, then you certainly experienced it when you went to shop for routine goods and they were out. First, it was toilet paper, and then it was baby formula. Today, it's eggs, right? So, what we've learned is that our supply chain is amazingly sensitive to any deviation. And we've kind of gotten real good as a country at this just-in-time lean inventory, which means we don't have any slack in the system for when things have hiccups. So, what the major trends we've seen that are driving the automation industry overall, it would be countries are focusing more on self-production and they want to be less reliant on international shipping. We don't have to worry about getting goods in a container, moving them to a major port,
Mhm.
distributing those across the nation just to have our business function. So there is definitely a resurgence of wanting to source locally. And I don't, we call it reshoring in manufacturing.
Mhm.
I don't think reshoring is literal. Like we're taking a factory that was in Vietnam or China, we're plucking it out and we're moving it to Kansas, where you live. I don't think it's happening like that. I think it's more like as companies and board of directors are making strategic decisions about their next manufacturing investment, they're just not looking overseas, they're looking domestically.
Mhm.
Well, you know this, Robert. You've had a high flying career in M&A. It's a global supply chain. So your competitor
It
is
is.
in Vietnam or your competitor is in China or wherever they are. So if you're going to do that manufacturing in the United States, then it has to be modern. It has to go from traditional
Yes.
manufacturing to advanced manufacturing, and you have to make best use of technology and have a multi-year plan so that you can modernize as technology evolves, right? We've had a big week in terms of tech announcements. AI got turned upside down this week. And that's happening in robotics every single day, both through company failures. Your robotic
Mhm.
provider could just be gone tomorrow. Mergers and acquisitions, we call that the Kiva dilemma. When Amazon acquired Kiva, there was a lot of
Mhm.
companies that got discontinuation of service notices where they had bet the farm on that Kiva technology to build out e-commerce
Yeah.
capability, as an example. So that is continuing to happen. And so what companies need is a multi-year strategy with things like planned obsolescence. Hey, we know this tech is
Mhm.
cutting edge today, probably won't be 4 or 5 years from now. So how do we deal with that? And then they also need the ability to grow over time. One of my favorite questions that I get asked at any initial consult by a CEO is, can you make my operation AI powered?
Mhm.
Well, the short answer is no, not today, right? But that's not the answer I give. I'll say absolutely. However, we have a multi-step process. First, we got to get your data right. Before you can do anything with AI, we need to have good data. Then we got to get your IoT right. We have to get your
Mhm.
automation right. And we have a lot of structural changes to your business we have to make before you are ready to have an AI-powered business. So those are the types of things we think about is if you're going to do it, kind of crawl, walk, run. It's like turning the Titanic. When you're dealing with large organizations, they're not ready
Mhm.
for a rip and replace solution. They have to build culture and technical capabilities inside their business
Yes,
to manage this new advanced manufacturing paradigm.
that's fascinating. And like you said, this is something CEOs and boards of directors, this is first and foremost on their minds right now. Automation, AI, reshoring supply chains. Like you said, they're not necessarily bringing factories back to America, but there's a lot of consideration about where that next factory is going to be and how it's going to be operated. So really interesting to hear about that. I want to go back to the Chang Robotics Fund. So the work Chang Robotics as an engineering firm is doing right now is incredible. You're doing these really great automation projects. You're creating a lot of shareholder value for the clients you're working with. What was the genesis of the fund, though? What was really the inspiration to say, we should go start a venture capital fund that's going to invest in and support these new technologies?
Yeah, that was basically my entire private study last year. Was we knew we were already investing in companies, but we're capital constrained by what we can do as a business. We can only invest the amount of profits that we make. That's our max
Mhm.
potential. So we wanted to do more. We wanted to write larger checks and commit larger resource allocations to the companies we were already helping. The other was because word was out we were doing this, the inbound request from startups that had really cool technology was just becoming
Mhm.
overwhelming. And we were getting to where I was putting people on a 6 or 8 month wait list just to write an angel-sized check. And that wasn't the type of impact we wanted to have. So what
Right.
we saw in the marketplace was there is a huge thirst for this from founders. All founders want their dream to stay alive. They want their technology to have an impact and they want to have a
Mhm.
legacy in the marketplace. So if we couldn't help them with the resources we had, if it just wasn't enough, we said we got to scale this. And so as we studied the market,
Yeah.
the scaling solution we found was let's produce our own venture capital company that's founded on excellence in technical underwriting and fantastic relationships with founders. We don't have any work to do to meet new founders, and we don't have any work to do to increase our technical underwriting of technology.
Mhm. That's amazing. What it sounds like overall is Chang Robotics as an engineering firm likes to help people. The Chang Robotics Fund is going to allow you to help even more people and even more companies as they think about automation, as they think about new technologies. So that's amazing. Matt, you mentioned you have so far, what, 11 investments, 11 angel investments so far within Chang Robotics. What are those dynamics like? How does it work when you've got Chang Robotics, an engineering firm that's supporting these companies with engineering work and design work and automation? You also have Chang Robotics as an investor on the cap table, sometimes on the board of directors. What does that dynamic feel like for your team and for the teams you're supporting, for the clients here?
Yeah, it's a total mindset shift. When you write that check and you're an investor, so I know you get it. When you write that check, you stop viewing that startup as a client and you start viewing them as a partner. You're sitting on the same side of the table. And we have far more upside, so to speak, in the
Mhm.
deal by having that company succeed and possibly do an acquisition or an exit than we do by potentially doing service work or robotic work for them. So it helps
Mhm.
us change our mindset. We sit on the same side of the table as the founders. We have their best interest at heart because we're vested. We are invested in their company and we have stock in their companies. And then what it usually manifests into after a short getting to know you period is typically those companies will come back to us. They'll see what we're doing and they'll want
Mhm.
that for themselves. And they'll say, hey, can we have a formal partnership? And so with almost every single one of our portcos that we currently have, we end up writing these partnership agreements that
Mhm.
says, hey, they want us to do business development for them. They want us to include their technologies in our robotic systems when we can. They want us to present the opportunity to our clients, which are their dream clients. They want us to
Mhm.
present their technology as an opportunity, and they want us to fill the gaps because they recognize that their product still may be early stage and it's got a lot of
Mhm.
product development to go before it's really robust enough for the commercial or industrial marketplace. So we help them with those things. We take great pride in it. They love it because we're like the Uber of Tesla engineering. And I say that jokingly, but we've just started getting Tesla engineers into our company that want to work in an exciting small company that is doing big things. And so, for our startup partners, they can just turn that on and do a certain
Mhm.
sprint or a project, and then they can turn it off. And they don't have to carry that fixed overhead of a big engineering team, which they probably don't know how to build themselves anyways.
Right. So it sounds like you're helping them with a lot of flexibility. It also sounds like you're not just helping with engineering, you're not just helping with automation and design. It sounds like you're helping these companies really build a business beyond just the engineering. You're helping them think through their go-to-market strategy. You're helping them figure out what their business model is. You're really helping them get to the point of generating revenue and profitability and positive cash flow. That's a pretty amazing thing to bring to a portfolio company.
Yeah. And then, we always because we own a piece of their company, we're focused on making them better. So as they
Mhm.
hire their first engineering talent and they start to build out a CTO, an engineering department, a software department, and those professionals they've hired work with us, it's kind of like a free advanced engineering boot camp that they get. So as they work with my team, they're going to get better because iron sharpens iron, right? And just being around a
Mhm.
world-class team helps these portcos build more technical and better teams internally.
That's awesome. I want to pause real quick to go to the Q&A. And by the way, I misspoke earlier. The chat is disabled, but there is a Q&A down at the bottom. So apologies for the confusion there. Going to the Q&A though, question number one, do your clients own the intellectual property and patents after Chang Robotics finishes implementation? How does the intellectual property ownership work between Chang Robotics and the clients you're supporting?
Yeah, our clients own the IP is the short answer.
Okay.
And that's that sitting on the right side of the table piece is we want them to have world-class IP because it builds value into their company. There's a lot of times that they will look in our library of intellectual property. And at our company, we have a lot of trade secrets, patents, and supply chain relationships. And they'll
Mhm.
want to use something that's in our library. So in that situation, they
Mhm.
just kind of check it out. They get beneficial use of it for a period of time. And if they want to keep it in their company, then we kind of do a one-off licensing deal. If they choose,
Gotcha.
we never push that. Our founders usually tell us what they want, and then we work out a
Mhm.
win-win.
That's awesome. All right, next question. Is Chang Robotics focused on, or pardon me, the Chang Robotics Fund, is it focused primarily or exclusively on Jacksonville and North Florida? Or are you taking more of a nationwide approach to the clients you're working with and the investments you're making?
No, it's nationwide. And this morning I was on a call with some innovators from southwestern Ohio, right? And so we are absolutely in to help them. We already have portcos signed up from Connecticut and Colorado Springs and all over the place. That being said, if anyone has been to Jacksonville, they know I'm all about Jacksonville and Duval, as we call it here. So we do have a natural bias to Jacksonville in our company selection because we have so many existing relationships. So it's just kind of a natural, I'd say, concentration towards Jacksonville, but it doesn't affect our company
Mhm.
selection. We're nationwide, and we know that tomorrow's innovators don't just come from the established tech hubs. These folks are coming from small
Mhm.
towns all across America, and we want to be the type of VC that they can partner with, where we actually drive value and we understand right where they sit.
That's exactly it. And Matt, that's one of the things I've always loved about the work you do is like we've talked about, talent is distributed everywhere. There are innovators all over the country, all over the world. Opportunity and especially capital are not evenly distributed. So what you're doing with Chang Robotics as an engineering firm and the Chang Robotics Fund as a capital allocator is you're really helping democratize finance and democratize engineering support. When you've got that innovator who lives in a small town, like you said, they're not located in San Francisco. They're not located in Houston, for example, where there's not just capital, there's significant engineering support. What you're doing is bringing them the resources from an engineering side and from the capital side to help them really go build their company, attain the vision they have, and go change the world. So
Yeah.
that's awesome to see.
What I'd also say, Robert, is that's where the clients are, right? The places
Yes.
where people want to deploy their technology are evenly spread across the country. And I know you used to operate manufacturing plants in your career. These manufacturing plants are in towns most people have never heard of. And it's
100%.
easy for the East and West Coast to think of flyover states. Well, guess what? The work being done is in the flyover states. And that's where the manufacturing assets are. That's where the need is. And so that's kind of our philosophy is we're going to go to the places where the need is. And that's also happens to be where a lot of founders are.
That's absolutely it. All right, we've got some great questions. I'm going to keep going through these. Next question is, how do your clients see their investments in robotics? Do they prefer CapEx models or OpEx models? What makes the best ROI? What makes the best return on investment from a business case perspective when you're working with these clients?
I'd say the predominant model is a CapEx model. And in the past several years, we have deployed robotic systems with a CapEx purchase. We've deployed it where the clients use debt, may take out a loan for it.
Mm,
We have deployed it on a lease basis so that it's viewed as a fleet, just like a company that has fleet trucks will now have a fleet of robots.
mhm,
And then we've also done it on an energy as a service model and a rental model. So we try to be really flexible with our delivery because everybody's financial situation and return metrics are different. I would suggest that
mhm,
the right ratio is to have a portion in CapEx and a portion in an alternative finance method, and that's going to deliver the highest ROI. But the one thing you wouldn't want to do, and this is a situation we get into frequently, you don't want to lease software that's core to your business. You probably
mhm,
need to own that software. It needs to become a digital asset of your business. Um, there is no reason you can't lease a robot that's driving around. Absolutely none.
mhm,
So we will work with our clients on a business case model that helps them kind of bifurcate what makes sense to own as an asset. We don't want to spend all the CapEx in a company on a project. We'd love to pay for some of this through operational savings or increased revenues that come from our system. So there's a balance there, and we try
mhm.
to help our clients find it.
Absolutely. That's really helpful. Next question from Robert Zinser. Is it a requirement that Chang Robotics fund portfolio companies utilize Chang Robotics engineering? Or are you willing to invest in companies that are not necessarily using Chang Robotics as their engineering partner?
I would say we will not encounter that situation.
Yeah.
Um, there's gonna one just like I said, there's a right mix. For example, we have a prospective portco that's doing coastal engineering. We don't have a fleet of coastal engineers inside of our company, so we're not going to pressure them to try to use us for something that's not a good fit. But when that company is looking for automation, advanced manufacturing, AI, IoT, any of these kind of cutting edge technologies, they're going to want to use
Mhm.
us because they have access to the best team in the country.
Right. Absolutely. All right. Next question. What are some interesting companies you've invested in so far?
Well, one that we love is another startup out of Georgia Tech, which is doing miniaturized X-ray. And so you talk about democratizing VC or democratizing certain things. This team called Oxos Medical out of Atlanta, they are democratizing scanning, and they're doing
Mm,
video X-ray scans that orthopedists love, patients love. They're portable. It applies to home health. You can take an X-ray scanner into any room in the hospital. And what they're doing is they're applying a machine learning layer to it so that the scan is already giving the medical professionals recommendations and
mhm,
observations to save them time. And they're also shooting live video. So why the orthopedists love it is if you can picture the hand and how complicated this would be to operate on, you can run a patient through a scenario of movements and watch the x-ray on a live video to plan your surgery.
Oh, wow.
That's an exciting company. We just think it's amazingly innovative. We've also invested in a autonomous drone company that is
Mm,
going to revolutionize construction site safety. So as we're focused on building in this country, we have to do it with people first, and we can't afford to put people in harm's way just because the job is
mhm,
tough. So they have found a way to launch tethered drones that can carry things like lighting racks and communication racks on construction sites that will dramatically improve things like road construction safety during the nighttime,
mhm,
both for the drivers. We've all driven by at night when the road crew is out there and you're kind of blinded. And also for the workers. One of the biggest risks in a nighttime construction site is falling in a hole that was just dug because
mhm,
you couldn't see it. So it's a variety of companies. Autonomous flight, miniaturized X-ray. We're excited for all of it, and it's the right technology stack to move us into the next century.
It's fascinating. And Matt, what I'm hearing here is you're not just thinking about the technology, you're thinking about what drives the need for the technology in the world. You're thinking about the problems that's solved. So I'll interject real quick with my background. I did mergers and acquisitions and large capital projects at two pretty large companies, Koch Industries and Cargill. And what I think people don't necessarily appreciate is the obsession that large companies have with safety. When companies are building these facilities, when I was at Koch Industries, we built a steel mill. We had 2,000 construction workers on site. We were very fortunate during this multi-year construction process. We only had one fatality out of 2,000 employees, but that one fatality was devastating. We shut down a 2,000 person construction site until we figured out what was going on. We made sure it was never going to happen again. It got escalated all the way to the CEO of the company. These companies are fanatical about employee safety, whether it's construction, operations, they're always thinking about making sure their employees are going home at the end of the day without any risk of fatality, without injuries. So hearing that is really inspiring. I've got a question here, which is, when I personally am looking at investments, when I'm doing an angel investment or when I'm supporting a venture capital fund, for me as a finance guy, I can do a certain level of diligence. I can build a financial model. I can go talk to engineers. I can't actually do engineering diligence though. I can't on a personal level really understand the technology itself without engaging the true subject matter experts. I have to imagine for you and your team, the diligence feels a little bit different because you guys actually are the engineering subject matter experts. So when you're making these investments, when the Chang Robotics Fund is making investments, writing checks, conducting your due diligence, what does that look like from kind of an engineering and operations perspective compared to people like me who have just traditional finance backgrounds?
I think for us, it's much faster because we're
Mhm.
actually doing large, complex automation systems on a daily basis. And I think, Robert, by now you've seen my calendar enough to know that when I see you, I'm coming straight out of an engineering meeting.
Yeah.
Uh, we can picture how that would work in a design. And the other thing we do is we don't just design the systems, we deploy them and then we put long-term warranties on them. So we
Mhm.
can also picture how that technology would hold up in the industrial setting or the robust hospital setting during a warranty period. So we can already predict how it's going to work as it's installed and then how it's going to work over the long term. And I'd say the other piece is because our business is so people centric, every robot
Mhm.
system we deploy is put into the hands of a workforce. So we also know how the workers are going to react. And that has been a large, I would say, learning curve of my company. It's now part of our knowledge
Mhm.
capital, is knowing exactly what workers want. We have a very defined method to interview them, to help them trial the technology, to build champions and build culture around high automation. So that's
Mhm.
the other piece that I think a lot of technology inventors haven't crossed that Rubicon yet is, well, it looks great and it looks cool on YouTube or LinkedIn, but is this thing going to work in the actual workforce? And will the workers embrace it? And that's a bias that we have that we want to make sure everything has a high adoption rate and gets that 5-star rating.
That's awesome. When you're doing this diligence, do you ever see technology or see a company where you think there's an opportunity here, but they need to change certain things? We're looking at the technology, for example, or we're looking at the manufacturing process. There's something here, but they need to change X, Y, and Z. And
Yeah,
if you're in that situation, do you ever say, hey, just so you guys know, like you might want to change this particular thing because this is going to affect how you produce it. This is going to cause bottlenecks or challenges for you. Or do you just say, you know what, like we can't solve everybody's problem. We're going to pass on this.
we I wish I was as gentle as you just said it, that hey, you might want to.
Yeah.
When it comes to technical things, my opinions are probably a little more clear to the person that I'm speaking to than that. But I'll give you one example. People are obsessed right now with battery packs, lithium-ion
Mhm.
batteries, and the different mobile power supplies that are in just about everything we use. And what people forget is the pace change of technology. So if you're going into generation one with a technology that's battery powered,
Mhm.
that's fine and dandy. Are we expecting that the battery chemistry and the battery performance, energy density are going to step function over time? And we should be, because
Mhm.
we also have our finger on the pulse of the science that's coming into things like battery power. And yes, it's going to change dramatically over the next 5 years. That would be a reason why, with multiple startups, we've cautioned against. They say, hey, we need to vertically integrate, and we're going to build a battery plant. And we're going to call a hard time out on that and say, let's
Yeah.
slow down. Whatever you invest in today will likely be obsolete 5 years from now. Is that acceptable to your plan? Well, no, it's not. Okay, well, let's rethink this then, because we have to be agile here. You're going to get lighter,
Mhm.
more powerful batteries in a different form factor very soon. So let's be prepared for that. And possibly this is a good chance for outsourcing or partnership instead of trying to
Mhm.
in-house something that's going to be obsolete in no time.
So you're saying I shouldn't try to build my own gigafactory right now. I should cross that off the list for the time being.
Yeah, I would sit tight on that for the
Okay.
time being. And I would say and we could work together on this, if you can identify that next major step function improvement to battery power, then let's build it on that, right? And
That's
that's
awesome.
thinking that we're going to embrace.
That's great. I actually, all jokes aside, I want to go back to that. So do you do you see really early stage technology here? When I was working at Koch Industries, for example, we had several university partnerships. We would work with these engineering and physics and chemistry professors who were almost like mad scientists, and they would have research that was literally still inside of a university laboratory. We would take a look at it. We would try to get a sense of what the opportunity could be, whether there was any investment potential. Do you go as early stage as those laboratory settings when you're working with potential clients and potential portfolio companies?
Yeah, super question. The short answer is yes. We built our own lab at Northwestern University. So we affiliate with a lot of different high-end academic institutions and local institutions that are emergent. Universities
Mhm.
are like startups too. A lot can change over time. So if you can pick the right university with the right staff and that spark of
Mhm.
innovation that's ascendant, then you've made a wise investment in relationship and time. So we do both. We work with the established ones. We do research at Georgia Tech. We do a lot of research in IP transfer at Northwestern University, but we also work within paradigms of university networks. So we are co-founders of the National Science Foundation's latest engineering research center, which is focused on building robotic hands for these humanoids you keep saying. What's the gap on the humanoids? They're going to move around, and someday they won't be teleoperated. They'll actually be functional. But until they have human dexterity, there's going to be a major gap. And so
Mhm.
we're actively working with groups like MIT and Carnegie Mellon through this institute on problems like that. Um, and then one of the other things I'd say about universities is the science you see that might be published in a journal is at least 10 years out from commercialization as a rule of thumb. So
Mhm.
there's a huge gap. It's called the technology valley of death, where some groundbreaking research happens in a laboratory. And before you actually see it commercially used, there's
Mhm.
going to be a lot of pain. There's going to be no funding. And it's probably going to be 10 years before that impacts your life. So one of the things we do is we look to bridge that technology valley of death. Are there genius level researchers that could be at a variety of institutions that we can partner with
Mhm.
to help them bring their technology out and get it into a real industrial application the next year. And so we're trying to take that 10-year gap of technology valley of death. We're trying to shorten that to 1 or 2 years as we cherry pick great ideas that we can help with.
That's amazing. And what that means for your fund is you essentially get actionable proprietary deal flow that nobody else would be able to go pursue. Nobody
Well,
else is going to be able to take that 10-year window and actually compress it down. And what that means is for any traditional venture capital fund where you have to return capital in no more than, call it, 12 years at the most, they can't invest in a company that's going to take 10 years to get to revenue generation because it doesn't fit with their mandate. What it sounds like you can do is you and your engineering firm can work with the university. You can take what would otherwise be a 10-year process. You can condense that down to, call it, 2 years. And at that point, there's an actionable opportunity and there's a viable business for you to invest in. Is that a fair characterization?
absolutely. We have 4 projects just like that going on right now that are in the academic lab. And we are taking that direct to industry use case, matching those firms with Fortune 500 companies that have scaled needs, big use cases that if we can solve it, it takes care of a lot of pain points all at once. So, but we have a secret weapon. Do you mind if I share it on the call?
Please do.
Okay.
I actually, for the audience here, I don't know what the secret weapon is. We're
Yeah.
not setting this up as like a bit, so please let me know.
Okay, we actually have two of my mentors that are both deans from prestigious universities now work at Chang Robotics. So we have an engineering dean and we have a business school dean. And what that does is it gives us kind of easy access through all of academia. We know who all the best people are. We understand exactly how to negotiate rates for things like research. We're very good at IP transfer and taking intellectual property out of universities and creating royalty agreements or license agreements. So it gives us kind of an accelerant that we have taken an engineering team, added some high-end academic features to it with some of our top talent, and then lets us talk to academics in a way they want to be talked to. And then we talk to the engineering community in their language. And those, as you might be aware, those are not the same language. There's a little translating that has to happen.
Not at all.
Yeah.
A little bit, yeah. That's fascinating. All right, so as you think about kind of the value chain for a venture capital portfolio company, you have to originate an opportunity, which it sounds like you do have proprietary deal flow here. You have to diligence the opportunity from a financial standpoint and an operations standpoint. Again, it sounds like you have some real unique, really powerful capabilities there. You have to support the portfolio company at kind of the board level and at the operational level, which again, your team is able to do in a really powerful way. The last step, though, is for a venture capital fund to make money, the portfolio companies have to have liquidity events. So with the network you have, you mentioned Fortune 500 companies in the industrial sector, in the food and beverage sector. Are you able to leverage those connections you have in big industry, in the Fortune 500, and help your portfolio companies within the Chang Robotics Fund, these smaller companies, these startups, work towards monetization events and liquidity events to generate value for the Chang Robotics Fund?
Yeah.
Sorry, that's kind of a layup question,
It
but
was,
it's
well,
really important that we touched on that.
The way we went to solve this, because I'm not the M&A guy here on the call, you are, right? And I'm not the university research dean. We have a person on the team that does that. We added an advisory board to the Chang Robotics Fund that is packed with former Fortune 500 CEOs and people that think like that. And so what those folks do is they have the lens, and I think in terms of exiting to a large company, that's a strategic exit, right? Is they have that lens of if they were going to invest in a new technology company to boost this much larger publicly traded company, what are they looking for, right? And what do they want to see along the way? So our advisors are coming into our portcos to provide that mentorship to help those companies, if a strategic exit is the right path for them, to help them build their company, their product line, and their organization so that it's ideal for a strategic exit in their market sector. And then we also have a couple other general partners in the fund that are very seasoned venture capital and fund managers. So for more traditional exits that might be trying to do an IPO or doing some sort of public markets exit, then we have a deep amount of talent in understanding how to structure that, the governance, the compliance, basic things that are actually hard for founders, like setting up your accounting so that you could go public, right? And so we have that level of mentorship and advisory also inside the fund. So no matter which way is right for our founders, then we have the right resource to help them get there.
That's amazing. All right, so if I'm listening to this call and if I'm sold on the vision of the Chang Robotics Fund, can I invest in this fund? How do I do so? Do I have to be an engineer? Is this open to anybody? Can I be just a personal investor? Do I have to invest through a family office? How does it actually work if I want to participate in this fund and have a seat on the rocket ship that you and the team are building here?
Super. So we set this up as what I call the full bird VC. This is the big dog VC. So it's a Reg D 506C SEC licensed security. So what that means is we can talk about it publicly, we can advertise publicly, we can take money from accredited investors, We do have, relative to some startups where you can fill out a form and say you're accredited, we do go through a bit of a KYC with our legal team. So as people are coming
Mhm.
in, but they're definitely encouraged to come in a personal capacity. And I would say that applies specifically to people that want to help or very curious.
Mhm.
If you love disruptive technology, then you definitely want to invest in this fund because you're going to get a front row view of things that 5 years from now are going to be very public and you're going to say, I was there on day one, right? And the other part is we're definitely, if you know me, I pull my friends off the bench. Once you invest in the fund, if there's a great area that a person can help, then we would love to have them get involved with a portco or a
Mhm.
strategic decision. So that would be for the personal investors. And that's kind of the profile we're looking for is those very curious people, technical minded people, problem solvers. We think this is a fantastic outlet for family offices because
Mhm.
family offices need diversity in their investment strategy. No, we don't expect them to do 100% of their allocation to our VC fund, but they need to pick emerging technology. And
Mhm.
I'd say the track record over the past couple of years with the traditional VC industry has not been very strong. So it's very tough for traditional VCs to attract that kind of family office wealth into their fund right now because there has not been performance to go along with it. It may relate to this technical underwriting that we're talking about. And finally, I do think we want to get a couple flagship institutional investors, the larger investment houses. As you're no doubt aware, Robert, nobody does the VC game for fund one and done, right? It's about building a system
Mhm.
that works better over time. And so we will be graduating to fund two. We will have
Mhm.
portcos that want us to come alongside them at future situations after they're done with fund one. We will be building to fund three and so on. So for the institutional companies, that seat may be filled if you wait till fund two or three, right? And we will already have our
Mhm.
institutional partners. So we'd love to get some institutional partners that want to have a different take on VC and get them into fund one.
That's amazing. For anybody who does want to invest, what is the process here? Do they reach out to you? Is there a website they can go to?
Yeah, absolutely. So we have a website, cr.fund. So pretty easy, www.cr.fund. You can request a meeting directly from that website. We're going to put up a little bit of contact information at the end of this so you can scan in. And I think for people that want to have serious conversations, they can reach out to yourself, myself, our other
Mhm.
general partners are listed on the fund. And so one of us will take the call. We'll get them onboarded with some of the technical information they want to know. For serious investors, we have a data room established. They can go in
Mhm.
there and do their own diligence. So it's not me saying it on a call. They can read it in the data room. And then, of course, we're already SEC approved, so we're ready to rock.
That's awesome. Matt, this has been a great conversation. Thank you for all the insights you shared here. I'm really excited about what you and the team are building here. I could not be more enthusiastic to see all this come together. So, for anybody in the audience, again, the website here is www.cr.fund. If there are any questions, please feel free to reach out directly to Matt, directly to me. We'd love to have additional conversations here. Love to keep the dialogue going. But Matt, thank you for your time. For everybody in the audience, thank you for dialing in. It's been a privilege to have you here. And we are really looking forward to getting to work with you, getting to work with these portfolio companies. And sorry, I think we just started sharing the screen.
There we go. There's
Oh,
your
perfect. All right, we got a QR code there.
Yep, we got a few to pick from. And Robert, while I'll give folks a minute or two if they want to scan into some of these options and either save them or go ahead and log in. One of the key differentiators too is a typical VC fund will go raise a lot of capital on a thesis. And it's usually a very
Mhm.
narrow thesis, right? We're going to use AI to transform the shipping industry, and we're going to look for 20 companies that have AI to apply to the shipping industry, right? And typically they will raise the commitments to the fund prior to recruiting portcos, and that puts quite a time delay between committing funds and then having those funds hit the marketplace through qualified startups.
Mhm.
So I think there's a couple gaps with that approach, and hopefully I'm not teaching our competition something here that causes them to rapidly innovate. But uh, that puts the VC funds and the investor funds at the mercy of the market. And we know that company
Mhm.
valuations kind of follow this boom and bust cycle, right? And we're coming out of a bust cycle, or coming off of a boom, and we're in a bust cycle right now. And so what that leads to is, if you invest in a VC, even a mediocre one, at the wrong time, you're going to lose money. If you invest in a VC at the right time, you're going to make money. It may not have
Yes.
anything to do with the skill of the company and the investors. It may just have to do with the market timing and the valuation of those shares that you bought from the startups. So a difference here is, we have already cultivated relationships of 15 startup companies that have disruptive technology that have asked us to be portcos. So they've said, hey,
Oh,
Matt,
wow.
we heard on the street you're doing this. I know you didn't do the webinar yet, but we want in. And we have at the first stage gate said, yes, your technology is world changing. It's good for the environment. It's good for the workforce. We
Mhm.
definitely want you in here. Let's put you through to diligence. 6 of those companies have already passed diligence, and 6 of them have already pre-negotiated their stock price with us before we even launched this fund officially. So what that means is, for the investors that write checks now, your money is going immediately to work in the marketplace to help these companies build their next vision. And it's not through this kind of, as you know, Robert, venture capital investing is very much of a poker game, right? Of, maybe we'll invest in you, and maybe I'm telling you what my company's worth. We already have open
Yep.
relationships with each of these companies. I personally know every single founder, and I understand their character. I understand where they live. I understand how many kids they have, if they're in that stage of life. And so we're going to put this money to work right away. That gives us a financial benefit that the marketplace would
Mhm.
consider discounted shares, right? We already have the best rates on the investment in the company. And then they've already selected us because we're the only VC out of probably 20 they've interviewed that's
Mhm.
actually going to get in and help them do the work through engineering
Yes.
and project management and business development, and the things that those founders really need right now that would be very helpful to them. So, as hopefully that gave
That's
folks
exactly it.
an in, but I wanted to draw a little contrast between the traditional model, which is this commit the money
Yes.
and we don't even know what we're getting yet, to where, if for the money that comes into our fund, we know exactly where it's going, and we know the names and the kids of everybody that it's going to, and we're going to help them get it done.
That's amazing. And Matt, to your point, venture capital is largely about what they call vintages. So, what's the vintage of the fund? When you go back to 2020, 2021, right at the peak of kind of COVID, when interest rates are low, there's a lot of money flowing into venture capital. And all of these venture capital firms were chasing the same relatively small pool of startup opportunities.
That's right.
What that led to is massive inflation in valuations. So if you go back 5 years, you saw a lot of startups, a lot of SaaS companies, especially raising money at 50 to 100x ARR. And when you're investing in valuations that are that lofty and that frothy, it's extremely difficult to create value for the venture capital investors. That's the inherent dynamic of venture capital, though, is there's a lot of competition for the same relatively small pool of opportunity. And Matt, what you're doing with Chang Robotics as an engineering firm, with the partnerships you have, with the personal rapport you have with these founders and CEOs and innovators throughout the economy, is you really have built a pipeline of proprietary deal flow. And what that means is the Chang Robotics Fund is not competing with every other venture capital fund out there. You're not just trying to bang on the door and say, hey, let us invest alongside everybody else here. You do have unique opportunities that very few venture capital funds are able to generate. A large reason why is, every investor, myself included, says, hey, we're going to add value. It's really easy to say, we're going to support you. We're founder friendly. We're here to add value to your company. Adding value to a company as an investor, though, is really difficult, because what companies need is operational support. They don't need somebody on the board of directors with a finance background. And again, that's somebody like me saying, hey, have you thought about your LTV to CAC ratio? Or have you built a financial model for this? They need people who are able to go to their factories and help them figure out how their equipment should work and what their manufacturing process should look like. That's something really unique to your company and the Chang Robotics Fund. And the doors it opens for you and the way it helps you create value for these companies really is profound and unique for the Chang Robotics Fund.
Yep.
So
Couldn't agree
I
more.
think it's amazing. I'm excited here for anybody in the audience here. I don't know how many people we have left. For anybody here, we'd love to partner with you, love to have you as part of this journey. And we are just grateful and honored that you joined us for this time. So, Matt, thank you. Everybody in the audience, thank you for your time. Please reach out. We'd love to keep in touch. And it's going to be awesome to see all this come together.
Super. Thanks, Robert. And thanks everybody for attending. Appreciate it.
Thanks so much, everyone. Take care.